General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Let's get the work done for Friday. Today's the 24th. Our anchor point was confirmed. It was Tuesday. Expansion did play out today. Terminus was hit today. Let's look at NASDAQ. This was the goal. Kind of hanged out in Asia all day and then chopped. Today, slow rotational day. Down close day, he got there real slow. It was rotational in yesterday's range most of the day. Look at H1. Slow Friday, but we still got the VR target. I don't know why I put stilled. Here, you see how we took our previous month's low, cleared out all these wicks. Kind of textbook. Previous week's low, sweep repeat. That should be previous month's low. We go here. We've had a super inside day on ES. We didn't even take previous day's low. Trap order flow, engineering liquidity at the bottom. Choppy day. We didn't expect much for a Friday. Check out the H1. Yeah, just kind of hanging out, not really doing too much. Definitely a slow day. Definitely a slow chop inside day from the H1 perspective. And then on the daily chart, it just looks real lame. But man, take a look at the stock charts. I am surprised we didn't touch this daily order block. Rejected this gap, which is interesting. For the Qs, we took care of business. It's seen a big sell-off on MU. It was just trying to moon that thing too. We took the monthly level. Now take a look at NVIDIA. Back-to-back inside day. So the standard is holding up while everything else kind of gets pushed around. People probably really want lower prices on this too, and it's not going. Today was a no trade day. I was outlining the correct stance. It was a slow week. I knew Friday wasn't going to do much. But we need to be true to engage. More volume, more institutional support. FEG's holding. What did price deliver that as experience? I am seeing intraday basis I can take advantage of systematically. If then for next similar day, if rotational inside day don't push it. Did the framework play out? Yes. What did I learn? I'm starting to get better at looking at other assets while indices chop around for the summer. And what will I watch for tomorrow? Tomorrow's a study day. All right, that's all the work for today. Y'all have a good night. Peace.